They're coming in, Chris.
Fast and furious.
Can you see the count?
Mm-hmm.
All right. Give everybody a minute to get in, and then we'll get this started. 100. For those that are on, hope to make sure you can hear my voice. If you can just type in the question box where you're located, or if you think the Yankees will win, the most important question. Barry, you're always in Parsippany, Barry. Go Mets, Kristen. Boo. I know, Chris, you're a Met fan. I started a Met fan until my brother would beat me up if I put him on. Jim Greco, Yankees will win. Yep, thanks, Jim. Phillies, getting some interesting answers. We're not getting a lot of answers coming in. I just want to make sure everybody can hear. And it's 8:31, so we're going to start off. Remember, let me stop sharing the screen for a second. Okay. Remember, good morning, everybody. First, we're back to our PPP webinars. I believe next week we might do one for remote auditing, how to get ready for a remote audit. That's also not from an auditor as much from a client aspect. But today we're back with PPP. I'll introduce our speakers in a second. I think we know the drill. We're going to have 4 polls, and if you're looking to get CPE, you have to answer at least 3 of those polls during the session. When you go to answer the polls, please remember to minimize the screen, because I think if it's maximized, then you have a problem trying to answer the polls. So please try that. I know I keep getting people saying that the polls aren't working, because it works for a lot of people, so it's got to be something more on your end with the computer. As I mentioned, we're going to jump into the seminar now. We've been working with this PPP, I think, since March. And we've talked about this application a couple other times, and people have asked for some examples / workshop on the application itself. So, our presenters and we decided to rip our sleeves off. This sweater had sleeves before we started this session, and we're getting down and dirty, and we're trying to figure out how this application works. And we're going to look through some examples, try and give you, some examples we go along. You can ask questions. Try and keep the questions concise, because as I read them, it's difficult to go through the whole backstory. We have some answers that were submitted early, and we'll go through those too. So presenting today are 2 managers at Sobelco. We have Chris Martin, who I believe presented before, right, Chris?
Yep.
And he's
the first one we
senior
did.
manager. And we have a tax senior manager, Karen Henderson. And Karen, I think you're going to commit to what the IRS is going to do and the government's going to do, correct?
Absolutely, Brad, without a doubt.
Yes, thank you. And now, if the PPP and the SBA has not been enough, I feel comfortable for Karen saying, whatever I say today can change tomorrow, or whatever she says today can change tomorrow.
It can change by lunch.
It can change by lunch. So with that said, I'm going to share the screen, and then Chris, you can start us off.
Great, thanks, Brad. Yeah, as Brad said, I've presented on PPP before, right at the beginning. A little bit different now. We've got some actual guidance, at least. There's still a lot of questions out there, but as Brad said, things can change and probably will before this whole thing kind of ends and we get our applications for forgiveness in. Back 4 months ago, my hair was a little shorter. Since then, I haven't been able to get a haircut. Sorry, that's tomorrow. Brad continues to call me a hippie, so I went with the music theme today. So as we work through our example, while it's not, Grateful Dead and jam bands, I'm more of a rock guy. We worked some blues references in there, so you'll see that. So to get right into it, our agenda, we're going to start by going through the easy application pretty quickly, actually, because it really is an easy application to fill out if you meet the qualifications. So we're going to start there and kind of run through that. After that, we will go through our example, what we're calling the standard application. So we'll work through that in some detail. We've got a lot of information to get through there. We'll talk about the safe harbors that are available. So they're pretty important and pretty helpful to business owners. And also we'll talk a bit about the 24-week period versus the 8-week period and some of the advantages or disadvantages of electing out of or going with the 24-week period. And then we also have some other considerations we'll talk about as well at the end if we have time. So with that, I'll hand it over to Karen.
But before we go to the first slide, I want to put up the first poll real quick, just to make Karen more nervous that she's about to go. So the first poll is, if you can answer it, is where do you stand on filing for forgiveness? And I leave the poll open for about a minute or until we hit near 90%, and then I close it down. So the quicker you answer, we'll get to it. Somebody asked a question already. Good morning. Where do I see the questions? You don't see the questions. We see the questions. So I don't know if that's what you're referring to. All right, 75%. And Karen's anxious to talk, so get us up to around 90%. And right now it's still saying, where do you stand? 41, the highest is 41% say still using the funds, believe it or not, Chris. 37% say anxiously waiting. And 7% say haven't received any funds. Okay. Ken, we will get to that comment in a second. So I'm going to close the poll, share the results, and Karen, you're ready to go on the easy application checklist.
Great. Thanks so much, Brad. And Chris, I have to tell you before I even get to this, for all the men that are worrying about their hair, you can only imagine how we felt during the first couple of months. I couldn't do a webinar until I could get a haircut. So as I'm sure everybody's aware by now, on June 5th, Congress passed the latest phase of our PPP programs, which we term the Flexibility Act. And a few of the salient facts with respect to the Flexibility Act. The covered period was extended from 8 weeks to 24 weeks or December 31st, whichever comes first. The borrower's forgiveness for non-payroll costs was increased from 25% to 40% of the disbursement amount. And there was a change to the safe harbor provision, which now extends the period for the restoration of your headcount from June 30th to December 31st. There were a number of other items that touched on headcount, and we'll touch on those later in the application process. So with this came Form 3508 Easy, or the Easy application. And for once, the government is not making this up. It really is an easy application. So on the screen, you're going to see the 3 criteria. If you meet at least one of the below criteria listed, you are able to utilize this application. As we'll see on the next slide, it really is a simple application to submit to your lender and calculate your maximum forgiveness. And I'd like to point out the important note here with respect to your FTE count. You'll note that we bullet point when you're looking at the second and third criteria, which has to do with reducing annual salaries or hourly wages of employees making less than $100,000 during 2019. And as we continue through the example, you'll keep hearing the importance of that $100,000 mark. If you're unable to hire or you offer employment and you are turned down for a rehire, those will not count against you in the calculations. It's important to document the situation and what has gone on, and especially if you're offering work to somebody and they turn you down, you'll want that in writing, but that will not count against you. So if we could skip to the next slide, please, Brad.
Yep.
So as I mentioned, 8 lines, very simple calculation. We're going to go through in greater detail as we move through the webinar as to what's going to count in each one of these buckets. But you'll see line 5, you accumulate the use of your funds. Line 6 is your PPP loan amount. That was the amount that was dispersed to you. Line 7 is your payroll costs. Again, you will note it's at 60%. So now you can use 40% of your disbursements, as I mentioned, for non-payroll costs. You come up with those 3 amounts. The smallest one, that's your loan forgiveness. You submit that with all your documentation to your lender. It must go to your lender. You can't change and submit it to any other lender at this point, and you're done. You will go through this process, 8 lines. So for those that are fortunate enough to use this, great. As we'll see on the next slide, for those that are not fortunate enough to use it, we now have the standard form, which is now condensed to 5 pages. We've outlined what is included in each of the sections. It's important to note that when working through the standard form, you're going to work from back to front. As Chris will show you when he works through the example, you need to start with the Schedule A worksheet and work forward in order to be able to populate and answer the questions on different calculations and FTE numbers. So, Brad, if you don't mind.
I just wanted to point out there too, on the easy application, there are the certifications that you're going to have to attest to, sign off on. They're very similar to those that we'll see later on the standard application, but there are a few more, obviously, that you've met one of those 3 qualifications that Karen had up at the front end. So, the application isn't just that little sheet that we just had up. There still are the certifications that you have to meet.
Thanks, Chris. That's a great point.
How easy is this going to be? And I'm leading in with a different question. Somebody asked the question, and we're hearing the rumors of loans under 150.
So that is being floated out there. At this point, that is all it is. It has been discussed. You see it on the news or read about it daily, but there has been no guidance that this is what is going to occur. We understand that the banks are backing this because the effort that is going to go into the forgiveness applications, they feel is not worth it for those below 150. But again, there has been no definite guidance. Chris, are you aware of something different?
No. Again, it's just being floated out there as a potential kind of next phase of this thing if it happens. So that's all it is right now.
We will be sure to let everybody know ASAP if this does occur.
Right. It's just a rumor that's out there right now. So we all love to have that. We all love to hear that, but it's a rumor right now. So, okay, back to the assumptions.
So these are the assumptions that we're going to be using throughout the presentation as the example is worked through. A couple of important items to note. You'll notice on the 3rd bullet point in our example, the employer did not bring back all the FTEs during 2020. There was a decrease in payroll. They are choosing the alternative covered period, which we're going to talk about more in depth. And they are not electing the 8-week period. They're going to go with the longer 24-week period, even though their loan was dispersed prior to June 5th. So on the next slide, you'll see what I'm going to refer to as the top of the form. And as Chris mentioned, there is a music theme going on. So we have Lucille Inc. in Memphis, Tennessee, who has Riley B. King as their point of reference. And this is where you're going to give a lot of good information to the SBA and to your lender. Some of this is very standard, your loan number, your lender's loan number. But now when you get to your PPP loan amount, it's important to note that this is the maximum amount of forgiveness that you are going to be eligible for. You can't be forgiven any more than you were lent. You're also going to see your loan disbursement date. As I mentioned previously with the assumptions, June 5th is that cutoff. This is going to be, so you're going to use that for 2 purposes. We're going to talk about that as a little bit later on. But also, your disbursement date is generally the date that you can begin accumulating expenses that you can use toward your forgiveness. And I say generally because there is a little flexibility in this. And then surprisingly, you see that the SBA has included your EIDL advance amount and your EIDL application number. Now, be surprised to see this, but for those that applied for both the EIDL and the PPP loan, the SBA is tracking this, they're going to cross-reference it, and any advance amount you receive, which for most people is generally capped at $10,000, is going to be deducted from any forgiveness. And again, Chris, as he works through the example, is going to show you this to you and talk more in depth. Next item you're going to see is your payroll schedule. And some of you might be wondering why the SBA needs to know this. They're going to use this to help them gauge your forgiveness. For those that are using their payroll is more bi-weekly or more frequent, you're going to then look towards your covered application and your alternative covered period. So Brad, if you don't mind flipping back just one for a second. So you're going to see the covered period and the alternative payroll covered period. These again work out to be two alternative periods. It's either going to be an 8-week or a 24-week period. They begin on the date of disbursement. So it's either going to be 168 days or 56 days, including the date of disbursement. For your alternative payroll covered period, this is going to begin on the first payroll period subsequent to your disbursement. And this is going to allow you to align your payroll period with your alternative covered period. So the next slide is just going to be showing you what it's going to look like as we populate this. And we're going to work through these numbers going forward in the examples. So now we get...
Well, while it's on this page, we've already had 2 questions on this, and I don't know if people are clear on this. You see line 10 and the EZ also had the reference payroll 60%. And so here are the 2 questions. I want to make sure we can clear it up for them. I'm confused. Can we only take 60% of salary for forgiveness? And then the other one is no more than 60% of payroll counts towards forgiveness. So that's not what it's saying. You can use, well, I'll let you explain the 60%.
Chris, do you want to jump in for a minute, or you?
Yeah, and it looks a little odd here because we did have so much in payroll costs, and that's the benefit of this 24-week period, is that you've got all this additional time to accumulate those payroll costs. But you can use, as long you have to use at least 60% of the forgiveness amount on payroll. So it's not limited to 60 as long as you use more than 60. As you'll see here, and as we work through the example, we've got $3.4 million, $3,496,000 in payroll costs out of a total of $3,549,000 on the forgiveness amount. So we've exceeded that 60%. So that's not going to be an issue for this example.
Okay, thank you.
So on the next slide, for the essence of time, really, it's important to note we've included some costs that go above and beyond cash compensation, but really it's important to note what you cannot include as payroll costs. So there's just a couple quick things to consider here. Any compensation that is greater than $100,000 annualized, and we're all aware as we've gone through these webinars that annualized has become an important term when working with PPP and the CARES Act. Compensation for any of your employees whose principal residence is outside of the United States cannot be included. And qualified sick leave and qualified family leave wages, if you received a credit under the Families First Coronavirus Response Act, the SBA is saying you can't get it both ways.
Right.
So again, these are things, this slide is going to give you information. You can use it as a guide as to what you can include, but important to remember those things you cannot include as payroll costs.
So the question's coming in again. We get this every time we do this session. So the 100,000, let's just assume it's for a year. Okay, let's make it a nice round number. The 100,000, that's salary. Does payroll taxes, benefits, retirement plan get added on top of that 100,000?
Yes.
Okay.
It's $100,000 of cash compensation annualized is the limit per employee.
The 100,000 annualized. Want to make sure we say that.
Annualized.
You didn't. You said it before, but we'll get a question. Oh, I can do 100,000 now. No, it's annualized 100,000 over 8 weeks or
Right.
24 weeks. Take your pick. Okay. No.
And Brad, if you have an employee who hasn't been with you during the entire period, again, you have to annualize what their compensation would be.
Right. That'd be very interesting if you give them a signing bonus. I don't know who's doing signing bonuses right now, but let's just say they did that. But anyway, I don't want to cloud that up. Next slide, or?
Yes, absolutely.
Yep.
All right, so on slide 10, there's just important key items to note. Again, as we just mentioned, your maximum payroll forgiveness if using the 24 weeks for cash compensation, 46,154. That's a number we're not going to forget. All right, if for self-employed general partners of a partnership and owner employees of corporations, there are limitations with respect to what you can include as compensation. We've noted it here at the, it's now 20,833 for the 24 weeks versus 15,385 for the 8-week period. There is also a second limitation layer. You have to go back and do the calculation using 2019 payroll for this group of individuals. And that's again so that owner employees and self-employed cannot manipulate anything and go ahead and pay themselves more during the covered period. And then just an important point for S corporation owners. Health insurance cannot be included when calculating payroll costs, but retirement plan costs can be included. So it's very, they've made this very straightforward.
So we're going to go to a poll soon, but I have a couple questions. I think that this may be, and I'm going to save the last one for you because I want to see what your response is, Karen. So we had a question in advance on this, and 2 people asked back to back, including Jim. You asked this, Chris. 8 or 24 weeks. Okay. Can they take the cake out early, or do they have to either have it as cookie dough or a full cookie? Can they take it out early?
No, you have to elect either the 8-week period or go the full 24 weeks. There's no in between.
There's no half pregnant, right?
No,
okay.
Not in this case.
You're either going to go 8 weeks or you have to wait for the 24 to wrap up. And then we have a client, and I know we have other questions here. We have a client that says, what happens if I have to lay people off? You'll get to that later on, I imagine.
Yes.
Okay. So we talked about payroll here, Karen. Somebody asked a question, and Mary asked twice from our office. What about Schedule C people, the sole proprietor?
You see the limitations as noted. Those are the self-employed.
So what do you? Yeah, but how do you calculate their payroll?
It's based on the Schedule C from the prior year, from 2019. So the same way they calculated the loan based on the Schedule C, the net income on Schedule C, it's going to be the same calculation for the forgiveness.
And when they're looking at the expenses that are includable for forgiveness, it is only those expenses that would be included on their Schedule C that they can use towards any of the categories.
Okay. I'll direct Mary to you if she has more questions. And last question before I put the poll up. I don't remember you mentioned this, but I may not have been paying attention. What is the definition of personal residence? So they might be just talking about your mortgage deduction on the 1040, but that was a question there. And I'm going to say that.
Are you principal residence for those employees outside of the United States?
I don't know what they could be. You may have made a mention. Just said, what can you define principal residence? But real quick, I launched the next poll. What application are you planning on filing? Yeah, so Karen, while they're answering that, it just said, what is the definition of principal residence?
Well, I would think principal residence is what you're using on your driver's license, your voting registration, insurance. That is generally what defines your principal residence.
Okay. Oh, it says principal residence for foreign national. He just clarified. We may have to get back to Mark on that one.
We might.
Yeah. Because I don't know what he's referring to, what you said. So anyway, so I'm going to close the polls. We're at 76%. It's pretty, well, right now it's across the board, Chris and Karen. It's what application you plan on filing. 31% says easy, 37% says still considering, and 28% said regular, and 5% said unleaded. So
Great for the people that can do the easy. That's great.
Yep.
I didn't expect
All right.
to be that high.
It's
So
up
for
to
those
you.
not preparing the easy form, we're going to work through the worksheets that lead into the first page of the application. And as Karen said earlier, we're gonna work backwards a bit because all of the information here really starts with the tables that get attached with the Schedule A worksheet. And the last question, Brad, might be referring to this first bullet where it talks about principal place of residence in the United States. So. As you can see here, I have a completed table 1 here, and I'm going to get into the detail behind it in a second. But I just wanted to point out, a few of the areas that are going to be important here as we go into that worksheet. There are a ton of tools out there on the internet right now. The AICPA has one. There's a lot of firms that have kind of taken that and adapted it. Excuse me. So there are different things that you can use in different tools as you start accumulating all of this information. Also, I'll just say that we're assuming here in this example that you've accumulated your cash compensation from your payroll reports. The payroll providers are going to be coming up with reporting, a lot of them, in the next few months. So you're going to have the data to make it a lot easier for you to fill out these tables and applications. So hopefully you'll see those, in the coming months. And the one other thing I just wanted to point out on this slide, we're going to come back to it, is the FTE reduction exceptions. So we'll talk a little bit about those safe harbors and the exceptions in a little bit, but that's where those numbers are going to get added back in. So if you do have a reduction in average FTEs during the period and hit on one of those exceptions, we'll add them back here. You can go on to the next one, Brad. So as you can see here, the screenshot of the workbook I used, very straightforward, very simple formulas once it's all set up. We can make this available. It's not blessed by the firm or anything, but it basically just follows the formulas that the instructions tell you to fill out in this application. As you can see, if we go column C, that's where we're going to start with our 24-week cash compensation, which is what we're pulling from our payroll reporting. So that's what was paid during the 24 weeks. And then we just talked a bit about annualization. Now this is going to be the first time we do that. And we're going to annualize that salary over the year to see what their salaries are. And again, this is all capped at $100,000 for these employees. I have it broken out into 2 different sets. Table 1, I should mention, is for those that make under $100,000 annualized for the year. And we'll see later in table 2, we'll hit on the people that are making over $100,000. And the reason they break those out is because of these exceptions.
Now, Chris, what happens if in column C during the 24-week period they paid a bonus?
My feeling is that is included in there. I haven't seen any real guidance on that, but if they were paid a bonus during the period, I think that gets annualized and capped at the $100,000 also.
It does. Read examples regarding that.
Yeah.
But will that skew your $100,000 result?
Yeah, I mean, it could, absolutely, yeah. I mean,
Okay.
if they, did they get a bonus last year versus this year? That could be an issue because we're going to be comparing, as you'll see, to the prior year. So, yeah, I mean, it absolutely could. So we've got to, you've got to kind of take that into consideration as you're doling out that money.
Okay.
So, as we said, we annualize that salary in column D over the 52 weeks, and then we're going to compare that to the prior year average salary to see if there was a reduction or not. So column F calculates that reduction. taking the difference as a percentage between column B and E, your prior year and your annualized current year, based on the 24 weeks. And you'll see that that reduction is above and beyond the 25%. If you recall, you can reduce employee salaries that are making under 100,000 by up to 25% and not have to take into consideration any reduction in that salary for the forgiveness piece of it. So I'll show you how that works in a second. Now we can move over to column I and J. This is where we're calculating the FTE requirement. Again, accumulated information from payroll. You're going to have the average hours per week to come up with what that is. That would be what went into column I. So for the first two people, they also cut their hours by 10 hours a week on average. And how you calculate the FTE, it's you're taking the amount of hours worked divided by 40 and coming up with the decimal, capped out at 1, obviously, and that would be your, one person FTE at 40 hours. So for these two people, they work less than 40, obviously. It's rounded to the nearest 10th, and we come up with 0.8. That column's also important. We'll see that go into the table when we come back to it. And then columns K through N, we're going to go through and calculate now the reduction in salary, what the effect is on, on the forgiveness. So you're going to take in column K 75% of your prior year average salary in column E. So that would be the maximum amount, if you were going to cut 25%, that's what you would have to pay them and receive no additional reduction in the forgiveness. You're going to take the excess between that amount and what they're actually being paid through the 24 weeks annualized, again, in column L. So that's the difference between column K and D. And now they work through the calculation it's not really that intuitive. They're taking that times 24 weeks and then dividing by 52 to come up with what the excess is over the 24 weeks. Just intuitively for me, I would say, that 4,500 is over the year, divided by 52 times 24. Either way, you're coming up with the same answer. Coming up with column N, which is your excess that you reduce the salary by in excess of that 25%. So we did that for the two individuals here and came up with a total, which I have in that second section of. Someone muted me.
We're getting an echo from somebody, that's why. So Andrew muted us, sorry.
Gotcha. Okay. So the totals there we're showing at the bottom. And I just wanted to also point out some of the other totals that we're going to bring into table 1, which is on line 151 of the Excel, where I have line 4 indicated. I'm sorry, line 1 indicated. Line 1, it's Excel line 152. Line 1 and line 2 over to the right. So those are the totals that we're going to see on our table. Brad, if you go to the next slide. And real quick too, I just wanted to point out for just informationally again how to calculate the 40 hours. There is a simplified method for calculating that. If you wanted to take people that did work less than 40 hours and just count them as half an employee, half an FTE, and everybody that worked 40 or more as one, you can do that. Not sure, an instance where you would really want to, because it does affect the forgiveness, but nonetheless, it's there.
Chris.
So the 40 hours is the number that they're using, right? It's not just your example.
40 hours, yeah, 40 hours for an FTE, correct.
And what happens if the company's work week is 35 hours?
Well, it shouldn't really matter because you're also comparing that to the prior year. So I don't know why that would be an issue. As long as you're working, it's consistent. I don't think that should be an issue.
And one question about the prior year, you had the prior year salary. Should that include the bonus it was paid last year? Listen, if last year had a bonus, if I'm paying you $75,000 a year, but I pay you a bonus of 40,000, should that be 115? It should include the bonus. Okay.
Yes.
Thank you.
Yes. Yep.
Chris, if you had
also just
Sorry, I was just going to say, if you had a voluntary reduction in hours from one of your employees that were listed on table 1, That would not count towards your FTE reduction, correct? As long as it's voluntary.
Correct, but you would still go through and do this calculation, and then you would get added back later in the exceptions. So, and we'll get into those safe harbors in a little bit to talk about that. The slide that Brad has up now, this is just from the instructions, and it's basically working through that same calculation we just went through. So, if you don't have it in an Excel spreadsheet, you just want to go through the steps this way, you can do that either through annual salary or if they're hourly wages, you can also use it to do that. So if you go on to the next slide, Brad. You can see there that we came up with the same answer for the first individual, the 2,077, in letter E there. So just going back real quick, a couple of the columns that we're going to bring into table 1. Column C, which is your 24-week cash compensation during the period. Column J, which is our average FTEs for the period. And then column N, which is our excess for the reduction in salaries. And then we can go to the next one. So just going back to the worksheet here, you can see we've dropped those numbers in. Now, if you've got more than 6 or 7 employees, that then what they have on the table here, you're going to have to attach the detail of those individuals. For easier, we just put the totals for the rest of the employees there. So we had 113 other FTEs at 2,705 to bring us to the totals in box 1, box 2, and box 3. Which I pointed out on the totals in my worksheet. And now those, you will see in a little bit, is what really goes to Schedule A. So at this point, we've gone through everybody that makes under 100,000. We've gone through the FTE reductions, the excess reduction in wages, and we'll have that information available. You can go on to the next one. Table 2. Very similar, but a bit more straightforward to go through because we don't have to worry about those wage reductions because you could reduce people that worked over 100,000 by more than 25%. So we don't have to really worry about that here, but we do have to still come up with the cash compensation and average FTEs for those individuals. So we'll go to the worksheet for that, Brad, on the next slide.
Yep.
And we go a little bit further down the worksheet here to all of our individuals. I sorted it by those that make over 100,000. Very straightforward. You've got the cash compensation again in column C, the annualized amount again capped at 100,000, and then compared to the prior year. So there was no reductions, but it really doesn't matter here for purposes of this. And again, 40 hours are assumed to be worked here on average. And those totals now on line 151.
If they weren't working last year, you wouldn't have, what would they have for the prior year salary? Just be blank?
Yeah, I don't think, you just wouldn't have anything there, and it wouldn't matter. You just had an additional FTE there, which could be helpful.
Nothing compared to the reduction. You may get if you have prior year salary at 0, you may get a bad, like a formula error type of thing.
Yeah, right.
Okay.
Somebody who's smart with Excel can figure that out formula-wise. So those totals on line 151 will now go to the table 2 that we'll see the 1,015,000 and the 22 FTEs. If you go to the next slide, Brad. You can see again we listed out the individuals and the rest of them to come up with those totals in box 4 and box 5. And you can move on. So now let's talk about some of those safe harbors that we were talking about before. And there's really 3 ways that you can not receive those reductions on the forgiveness. The first one is if you didn't reduce employees or average hours paid during the period. So, if you compare January 1, 2020 to the end of your covered period, and you brought those wages back, or you brought those FTEs back, to what they were, then you check that box and you wouldn't receive a reduction for those individuals. So if in our first example there, Mr. Guy and Mr. Wolf, if we reduced their salaries and brought them back by the end of the covered period to what they were making or more, then we would meet the exception and be able to add those FTEs back in, so they would receive a full FTE for those. The other safe harbor, which I think is really important and probably applies to a lot of businesses out there, is the health and safety one. If you were not able to operate at capacity because of the crisis, health concerns, safety concerns, those types of things, you could qualify under that safe harbor reduction and also not receive that reduction in FTEs. If, for example, we have a client, in New Jersey, a lot of employees, close to 1,000 employees, that they were told they have to cut by 50% because they work in close quarters, light manufacturing type of stuff. If they were going to go under the 8-week period, as we had thought at the beginning, they took a maximum loan amount out, they would not receive nearly close to the forgiveness that they're potentially going to receive now, and have a large loan to pay back in turn. Now with the 24-week period, at least they can spend that payroll over that time, and they also have this FTE reduction safe harbor in there as well, since they still can't bring back employees to the levels that they were before. So that's a huge one, I think.
Right.
Can you go on to the next slide?
Somebody asked. Yeah, I know, Phil. We're getting static on Chris's microphone. We're not too sure why. You sound like Darth Vader at times, Chris. That's just when I'm talking in the office. I'm saying that. But anyway, somebody said, what happens if I got rid of an intern? The intern's contract ended during the 8 weeks. I'm hoping the intern's not paid that amount of money, $100,000 a year. But if so, I want to get a job there as an intern. What if there was an intern whose contract ended during the PPP loan period? Can the easy still be completed?
I would think so. It's not like you're terminating people or laying people off because of the crisis. It kind of goes to the same thing as we're going to talk about in a little bit. If you've got people that I'm sorry, I'm blanking out a little bit here. It's for a cause. If it's for a cause or something like that, you're terminating somebody because they're not performing, or in that type of instance. If you have a contract that expires, you don't have to keep them on. You have to run your business the way you need to run your business. So I don't think that would be an issue.
Yeah, I'm gonna launch a quick poll, but you used a word that we have to be cautious of, but yeah. For a cause. We had attorneys on 3 or 4 weeks ago, and even when they were, we brought up for a cause with them, they're like, well, it depends, Yes. So don't start typing in here. If somebody has a broken toenail, is that for a cause? We can't give you, we recommend you talk to an attorney, and let them give you advice if something's for a cause. Okay, we can calculate the cause, but don't start giving examples here. I do have to put up the next poll. Did you anticipate full forgiveness? I think after this session, I think I should ask the question earlier, do you anticipate full forgiveness? And then the next one later on during the session, do you now anticipate full forgiveness? So somebody terminated an employee on Robert, you're typing all caps. Feels like you're yelling at me, Robert. Okay. Somebody typed, Dan who asked a lot of questions. Terminated an employee on 2/11/20, paid severance through 3/31. Any advice?
Say that again?
Yeah, Brad, would you mind repeating that?
Terminated an employee on 2/11/20, paid severance through 3/31/20. Any advice?
Well, severance counts as compensation.
Right. I don't know what type. I'm going to close the poll. I appreciate the 7%. So it's 68% anticipate full forgiveness, 9% no, 16% are not sure. And you remember earlier there was 6 to 7% that didn't take any money? Well, they're the ones that are just here for the sweater. Okay. That's it. All right, so the loan amount was calculated at the 8 weeks, now forgivable over 24 weeks. Can we select the staff that perfectly fit the spirit of PPP and CARES Act versus those who may have been paid through other financial means as Medicaid fee?
I don't think we can be selective now.
Okay.
It's your
And
full population of employees.
And
Yeah.
we will have these answers, these questions submitted to the presenters too. All right, it's 9:15. I'm watching the time. Where do you want me to go, Chris?
Yeah, we'll go quickly through the safe harbor too here, but we don't need it because we didn't restore our individual FTEs to where they were, to the chosen reference period. So we had 200 before, we're at 139.6 now. And since we didn't restore them, we're not meeting this safe harbor. So this one just kind of walks you through that. It's pretty straightforward as you go through the calculations. So we can go through to the next one. We'll show you where that all kind of comes from. Again, we've got this worksheet created where it takes our total employees and shows the reduction. So, and the reference period I just referred to, you have two choices: February 15 of 19 to June 30th of 19, or 1/1/20 to 2/29/20. I'd advise to take the lower of the two. So if you do have a reduction, it'll be less of a reduction. Move on. You can skip past this one. We kind of just talked about it. So with that safe harbor too, that information now goes to this calculation here, where it actually shows the reduction, and you've kind of seen it before in the worksheet. But it takes your average FTEs during the reference period, which was 200, and then the average that we've calculated on Schedule A, which we haven't done yet, but that is the total from Table 1 and Table 2. And the reduction quotient is 0.7. So we've reduced by about 30%. And going back to the safe harbors, there are some additional considerations there. If you have people out that you furloughed on unemployment, for example, and offered those jobs back to them with written offers, very important to have all of this documented, and they declined it because unemployment's great right now, at least for the next well, not much longer actually. At this point, those would get added back on your reductions as indicated down below in the table. So we would add those individuals back. And again, for causing quotes there, consult with your attorneys if you've got individuals that you think fit that criteria, or if they quit, took a reduction in hours because of stress, health concerns, whatever it is. Those are potential areas there that you can need that exception. Very important. You can go on to the next one. So now we're going to go through and complete Schedule A, and we'll be able to go through this pretty quickly with a couple of other assumptions here. We've got rent, utilities, the non-payroll costs on top of that as well, and the non-cash payroll costs of health insurance and retirement plan contributions. So those numbers now will figure into Schedule A on the next sheet. And the way this breaks down is pretty straightforward. The top section is the information that comes from Table 1. The next section comes from the information totals on Table 2 that we've completed. And then this is where you start working in the other information that we just talked about, the non-cash, the non-cash compensation, retirement plan, health insurance, that type of stuff. And also just wanted to point out compensation to owners. Karen talked about that earlier. Owners were not included in any of the calculations that we've done so far. They go here on line 9, subject to those caps. And then line 10 comes up to your total payroll costs, which then goes to the next page, which is the actual application. So we kind of work backwards all the way to page 1 now, where we show line 1 payroll costs, adding in those other non-payroll costs, the rent and utilities. And then line 5 is where we take the reduction for the wages that we had. So after you total all those numbers up on line 6, you then reduce for any FTEs that you don't meet any of those other exceptions for to come up with the modified total on line 8. So you're multiplying the 3,642,000 by the 0.7. Now this is where you come up with your forgiveness amount. We kind of talked about it on the EZ form, the lesser of those 3 lines. either the total that we just came up with, your loan amount, or the 60% payroll cost requirement. And as you can see here, we far exceeded the loan amount with our modified total there. So
By the
we spent a lot
hey,
more on
Chris,
payroll.
Chris, by the way,
Yeah.
line 10 says divide line 1 by 60%. The questions that were coming in earlier saying, so it's only 60% of payroll, that would be multiply line 1 payroll cost by 60%.
Right.
This is divide.
Yeah.
So so it's actually more than the payroll cost. 'Cause
Right.
you're dividing.
Yeah, it does
So,
look
okay.
it does look a little odd, you know, since we did spend so much on payroll, but that's
Yeah.
the formula.
Just wanted to point that out.
Yep. And then finally we get to line 11, where the lesser of those 3 lines is the 2 million, which is our total loan amount. So you could see, even with all of the reductions, even though they were, you know, small, but you could see you could reduce payroll, you could reduce FTEs during the period, and because that 24-week period is so much longer than the amount that the loan was calculated on, we still achieve maximum forgiveness.
Okay. So there's 2 questions. Well, actually 1 question only. Chris says that Chris says you can file early. They seem to say that there's some guidance out there saying you can file early. I don't know if
And file if
before
you
the
have
24 week. Not 8,
if you're
between 8 and 24.
I haven't seen that. If you have the 8, you can file if the banks are ready, and then I think I thought you had to wait till the 24, but we'll look into
That's
that.
what I'm hearing. So I've heard Joe. Jack,
Yeah.
your bank hasn't given any guidance. I haven't seen any banks give any guidance yet. Has you guys seen the banks give any guidance as to what they're going to require for support?
No, I think that from what I've heard, Brad, and I know that both Chris and I reached out to people we knew, friends of the firm, that the banks are still working on how they're going to be developing this and what they're going to be looking at. And as we mentioned, the banks are hoping that maybe at a certain threshold amount, the loan might just be automatically forgiven and they don't have to go through checking the paperwork on some of the smaller loans.
Right. I mean, we know that over 2 million is going to be audited, right?
Yes.
So that's going to be a higher level of scrutiny. I imagine, and Jack, you know, I would say this, doesn't matter what level loan you got, make sure you have all the documentation available, okay, in case it's ever picked for something. But we know the over 2 million is going to be for audit. Now we're hearing 150 and under may just be like, goodbye, we don't want to deal with you anymore. But I wouldn't be surprised if they're going to request you to submit it, but they're not going to look at anything. But that's the Brad Muniz speculation here. Don't go off of that for anything. And then Ken asks this all the time, and I love asking this question to presenters. Real estate taxes, is it part of rent? If part of your lease you're paying real estate taxes, is it part of rent?
I still don't think we've gotten clear guidance on that one. Right now, it's just rent. So if you're paying as part of your rent the real estate taxes, it's not a separate bill. I would say your rent is your rent. I mean that you would include that whole thing. But if it's separate, I'm not quite sure yet if you can include that.
Right. Okay.
I would agree, Chris, and it's important to note though too that these are for leases that were in place prior to February 15th, 2020. So you need to have your lease that was set at that point in time. You can't go changing the parameters now to use up more of your loan proceeds.
Right. All right. And I know we can go a little bit over, but I am going to put out the last poll, and then Karen, I know you have a couple more slides, and I'll keep looking at questions, and we will go a little bit over. Are you concerned with the accounting or tax as it relates to the forgiveness? Is the question. Not you, Karen. That's the question that we're putting out there. Let's see. How is your figure in line 10 of the application higher than line 1? Because it says divide line 1 by 0.6, Sandra. So if you take line 1, divide it by 0.6, it's going to be higher. Let me know if that explains it. What is considered a smaller loan?
I think we were just talking about the 150 that's out there, getting floated out there right now. Maybe someone said smaller loan, caused some confusion.
Okay. So Karen, you're not going to believe this. Well, I'll give it a couple more minutes and then we'll reveal the results. It says, I'm trying to read some of these questions, but they're really long and it's tough to try and read through. So if you type long questions, I apologize. We're going to have to put them to another time. Same for someone retiring. Now they're just giving me part questions. All right, so I'm going to close it. So Karen, you're not going to believe this. For the first time, people are more concerned about accounting than tax. 38% are more concerned about accounting, 14% tax, 40% both. So if I split that evenly, accounting wins. And then 8 said it's all about the CPA. So
Well, that's good to know that accounting wins for once, Brad. Tax can take a breather.
Listen, I only care about tax. I'm an A&A person. Hey, Brooke, before we go to the last couple slides, what's with seasonal employees? Okay, I'm going to be honest. The clients that I work with don't have them, so I haven't looked into it that much, but I'm hearing a lot of questions about seasonal employees.
Yeah, there are some exceptions out there for seasonal employees. I'm going to be honest, I haven't spent a time looking at it because I don't deal with it. I don't think we have a lot of clients at the firm that deal with it. I haven't received any questions on it up until this point in the 4 months. So I can get back with some more guidance, but there are some exceptions there for the seasonal.
Absolutely, and the parameters for calculations are a little bit different, which makes sense because it would not be fair to use the same parameters as you would for employees that are working 12 months.
And I know that we have some YMCA clients, and I think that may have been person Cheryl who asked, and I know Bridget is going to probably be reaching out to you, Chris or Karen, to try and find out to give her some assistance on this. So
yeah, and we didn't mention it, but substantially, whether you're a nonprofit or a for-profit business, this application process is for the most part the same. The one line with the owner's salaries, obviously, if you're a nonprofit, you don't have ownership that's taking salary. There are no owners, but substantially, it's going to be similar.
Okay. So you have a couple more slides, and I'll look at the questions as we're going through. Karen, I think these are yours.
Yes, thanks, Brad. So this page, as Chris had mentioned before, both the easy application and the standard application have a page of certifications. So it's important to note that on page 1 of your standard application, there's a checkbox that says, is your loan $2 million or more? If you check that box, as Brad mentioned, there's going to be additional scrutiny by the SBA on your loan. If that box is not checked, it's deemed you've met the first certification, which is the necessity for the funds. But these certifications are something that you should take very seriously as you read through them and initial them. They're asking you that you're in agreement that everything is accurate, that any documentation that you are providing is that which you have either already provided to the taxing authorities, be that federal or state, or will be providing to the taxing authorities. So to those questions on sole proprietors or anything else, it has to be those expenses that you would include in your Schedule C or on your entity returns. And again, this is a sworn document. So we just want you to be aware of what is out there, what you're going to be attesting to, whether you use easy or the standard application. So on our next slide, we've mentioned throughout the presentation the 8 or the 24-week period. Again, if your loan was dispersed prior to June 5th, you have that option. And why? We were just talking about, in general, most lenders are not ready for the process. There is a 10-month deferral on the repayment of any loan. If you take the 24 weeks, gives you additional time to calculate either payroll costs or non-payroll costs. Chris talked to you about that. It is payroll providers are going to be coming up with more reports that are going to help you with this calculation process. If you wait the 24-week period, you'll be able to utilize their reports, hopefully. Now the tracking, you're going to, if you use the longer period, you're going to have to track and document for a longer period. That is the one downside, but the upside would be additional forgiveness possibly. And what can change? As we mentioned at the beginning of the webinar, by lunch, this could all be different. So there you go. Those are our takeaways on the 8 or 24 weeks.
Well, it's funny you say what can change. Things may change. I mean, if somebody asks a question, what's the significance of June 5th? It's, you know, it's not my birthday. It's not this. It's not my anniversary. It's the 17th. What's the significance? On June 5th, they made significant changes. You never know what can happen. So as you said earlier, June 5th, if the loan is prior to June 5th, you get a choice if you want to do 8 or 24 weeks, right? If it's after
Yes,
June 5th. Good, I'm sorry.
Yes. June 5th is the date that the Flexibility Act was passed by Congress. So that is the significance of June 5th. And yes, June 5th is the delineating mark for if you're going to get that choice.
Okay, right. And that a lot of that stuff came from an article that AICPA put out. And one of the things they said is, what are you rushing for? The banks aren't, I don't know if any of the banks are ready yet. So, and usually we'll have a banker come on here and give a comment of, we're ready, but I haven't seen anybody say that. Now I'm going to get the flood of comments. So go ahead.
So to wrap up today's presentation, we wanted to just give you a couple of considerations to think about. Again, the timing of the forgiveness period. Take a look at your own unique situation to see which one's going to work best for you in this calculation. As Chris mentioned, you can have some changes in your FTEs and salary reductions, and it's really not going to move the needle much in a lot of the calculations potentially. If you've been watching these webinars in the past, you know that it's been spoken many times, run your business. Don't let the PPP loan run your business. Run your business, make your decisions, and work through the calculations. The need for non-payroll costs. If you go the longer period, the need for non-payroll costs may lessen, which would lessen your documentation burden in that area. Tax considerations, we know that didn't win for this webinar, so we know that's not a big issue here, but as of right now, the loan forgiveness, which would be deemed cancellation of debt or COD income, is not going to be taxable to the recipient, but on the flip side, the expenses that would be used in the forgiveness calculation are not going to be deductible. So there's some tax considerations to think about with this. GAAP financial statement considerations. There could be a timing difference between forgiveness, your application for forgiveness and getting that done through your lender, and the date of your financial statements. And I'll let Chris or Brad chime in on anything with respect to that. Chris just addressed there's really not a lot of differences between a for-profit and a not-for-profit filling out this application. And last but not least, the AICPA has come out with a tool. We've given you the website address there to use it. They have blessed a tool that they are saying can help you, and we know that other providers are going to be coming out with similar such things to use in going through this calculation.
Yeah, I mean, you hit on the gap in tax considerations. I mentioned last time that more than likely the gap, I disagree with them. I've sent the letter to email to the FASB that you have to maintain this liability until it is forgiven by the SBA, form over substance, even though you fulfilled your obligations. That's my editorial comment. So accordingly, especially 630 nonprofits, but even 1231 year end nonprofits and commercials, you're going to probably have this liability on the book. So you should be talking with your banker to make sure there are not going to be any covenant issues. The question has come up from clients, if I still have the liability on the books, but for tax purposes, I don't get deduct the expenses. Do I have to add back the expenses in 20? But I don't get the forgiveness until 21. My current position is that if I don't have forgiveness, I still have the expense. So the expense is still deductible. So next year I may have an impact, but we can have a fun discussion on that with me and Karen and Chris. We were arguing about it the other day. So I'm going to let GAP and FASB drive tax. So
I'm
there's
a lone tax person, I'm going to disagree.
Outnumbered.
You think that we shouldn't deduct, they shouldn't deduct the expenses in 20?
I think there's a big, it depends right now, and we are thinking that we're going to get some clearer guidance with the issuance of the tax forms. I do know that the AICPA did write a letter arguing that there should be deductibility of the expenses, so we're waiting to see the outcome of that as well. But I think this is a big, it depends right now.
So a quick question I saw come in. This is completely unrelated because we could debate the tax stuff for a long time. I know Ben, Chris, our client Ben, he's dying to know that answer. Unfortunately, Ben, it depends.
Like most of the answers we get in.
Yeah, right. If somebody has a lot of part-time employees, what sage advice can you give them? Count them as half, or?
I mean, I guess that could be a situation if you have a lot that work under 20 hours, you know, they could be more beneficial for you to count them in the simplified method. I think you just have to work through the calculation and see what works out, you know, more beneficial in that instance.
I would agree. And in the examples we worked through and that we read through in preparing for this, they did show the difference between using the simplified method and the actual method. In those examples, I think it was 0.1 or 0.2 difference in the FTE count. So if you think the difference is going to be slight, you could go either way, you know, whichever is easiest for you to document and do.
Right. And if you pick the 24-week period, you have to maintain the FTEs for that longer period. That's one of the difficulties with the 24-week period. You know, we have some people that are like, I'm ready to go at 8 weeks, but I spent almost the money. If I go for the 24, I could spend all the money, but then you're running the risk that you may have to let go of people. Right. Now they can try and they have that one caveat that they can restore it by 12/31 though, right?
Yes.
Right.
Or the date of the application.
Okay. So I got one more question I'll ask. There were a lot of questions, long questions that we're going to give to the presenters, and they'll go through them, and we'll try and get back to everybody on it or post the questions and answers somewhere. This recording it will be posted, so you can go back and listen to it. Before I ask you for your closing comments, do you think that there'll be another round of PPP?
I mean, again, you keep hearing things out there. There's still money available through the end of the period that they've extended it, so you could still take the loan. It really depends on what's going on out there. If things get worse again or continue to get worse, who knows? Nothing staged there.
From everything I've read and listened to, I'm going to say that I think that the Mnuchin is pushing more, this is only my interpretation, that businesses get looked at for their viability, that it's not a blanket PPP anymore, and it gets looked at as a little more of a loan and viability. But that again is just my opinion of it.
Okay, so since you guys didn't want to bite on that political apple, I'm going to ask it a different question then, okay? Hey, Alan, I tried to see, that was the test of them, Alan. They passed, okay? Can you define transportation, telephone, or internet expense?
I was hoping somebody wouldn't ask the transportation question because I still can't find an answer on that. You ask 5 people and you get 5 different answers. But I mean, telephone and internet is what you're paying for the service. I think that piece is pretty straightforward. I don't know what the intricacy would be there, but the transportation, I unless there's been something more recent that I've missed, I haven't been able to find anything specific.
We could find no guidance on transportation.
Okay. So we're almost 10 minutes over. I want to thank everybody for coming. As I said, we're going to try and have another session next week, so watch your email. But I do want to ask Chris and Karen to give their closing comments, and as Karen's done, we'll shut it down. So Chris, any closing comments that you can give us?
I mean, listen, the fact that we have 24 weeks, you know, and the loan was over, you know, the shorter period, it gives a lot of flexibility here. So it really does, I think, speak to what the original intent of this whole thing was. As quickly as they got it out, it really wasn't thought through in some aspects. So really think hard about, you know, electing into that 8-week period if that's what you're thinking, just to kind of get it done, because, you know, there's a lot of room for error. You know, think about the 24 weeks.
Okay.
And I would just continue on Chris's sentiment. Take very seriously putting together all of your documentation and keeping that for a period of time. Know that even if your lender does not ask for it now, you could be asked at a later date for that. So as you're going through doing all your calculations, set it aside and make sure to have that available at a later date, that you've got all of that to support your calculations.
Great. Thank you very much. If you do want a copy of that worksheet, remember, as Chris said, it is not firm, whatever you want to say, but Chris is willing to share, and Karen was willing to share that, and you know, you can take it, play around with it, see if it helps you out. If you have questions, we have a COVID hotline. Feel free to submit other questions. But once again, thank you very much for attending and for staying late. We look forward to seeing you again at the next seminar. Good day, everybody.
Thank you.
Thanks.